targets to be mindful of. You guys have some lower level targets to be mindful of. Again, these are not our personal opinions. We're not drawing Fibonacci's on our charts. We're not making magical bullish price predictions. This is institutional volume that you guys can physically see in the market that sits at these levels. Alrighty, everybody, welcome back to another video breakdown. In today's episode, we are going to discuss and talk about the fundamental backdrop. We're going to talk about why the market sentiment flipped back risk on. We're going to go over some of the fundamentals that I've been paying very close attention to. I'm going to thoroughly read through an updated report from today. For those of you all in the private community, I will make sure to give you guys a full-on report as we roll over into Asia session, prepping for the data scheduled throughout the remainder of the week. This is just a quick update on why risk sentiment pivoted today and over the weekend, why we're seeing a rise in the total cryptocurrency market cap, why we saw a nice little tiny surge in XRP's price. I want to thoroughly cover all that for you guys in detail. And then I want to make sure that I leave you guys with a very thorough explanation of just kind of what to be mindful of, paying attention to in terms of the data, the remaining weeks, or excuse me, days ahead. We do have the FOMC release, Jerome Powell speaking, so we're going to briefly touch on that. And then after all that, I will go over my MNQ trade for today, breaking this down in detail, going over what I was seeing and why I was executing the sell position today. All right. So first, before we get into the technical analysis and the total cryptocurrency market cap and on XRP, let's just first cover the landscape as to why risk sentiment improved. So risk sentiment improved today as markets began to reassess. Let me zoom in for you real quick so you guys can see the font. Risk sentiment improved today as markets began to reassess the geopolitical shock that initially rattled investors over the weekend. I made sure to update you guys with that fundamental backdrop on, it was like Friday rolling into Saturday. The first major concern was that U.S. strikes targeted Iranian military infrastructure near Karg Island. Hopefully I'm pronouncing that correctly, probably not, which briefly pushed oil prices above $100 per barrel. At the time, the biggest fear across global markets was that Iran's oil export infrastructure could be destroyed, potentially removing more than 1.5 million barrels per day from global supply. Such disruption would have triggered a major energy shock, likely pushing oil significantly higher and increasing inflation risks worldwide. However, once it became clear that the strikes did not damage Iran's crude export facilities, markets began to step back from the worst-case scenario, as investors realized that immediate supply and the threat had not materialized. Some of the fear premium that had been built into the markets began to fade, which allowed risk appetite to stabilize over the weekend. At the same time, we had diplomatic signals starting to emerge, suggesting that global leaders are attempting to prevent the conflict from escalating further. A key development came when France President Emmanuel Macron spoke directly with Iranian President Mossad, highlighting efforts to open communication channels during the ongoing tensions. In financial markets, diplomacy often plays a powerful role in shaping sentiment. When investors see active negotiations taking place between global powers, it creates the possibility that tensions could stabilize rather than spiral into a broader regional conflict. This type of communication alone can be enough to reduce the risk-off environments that had been dominating markets in recent weeks. And in yesterday's report, I gave you guys a screenshot of exactly what Emmanuel Macron said in his X post. All right? Remember, we are in a headline-driven environment, so these Twitter tweeters like Trump and all these other presidents, when they say things that de-escalate current situations, they can definitely have a positive effect in market sentiment, and we've touched on that before. Another important factor improving sentiment was the growing confidence that global oil flows may not be disrupted after all. Reports indicated that Iranian tankers are still being allowed to transit through the Strait of Hormuz, one of the most critical shipping lanes in the global energy system. Roughly 20% of the world's oil supply moves through this corridor, so any disruption there would have severe consequences for global energy markets. However, confirmation that tankers, including liquefied petroleum gas shipments, successfully crossed the strait over the weekend helped calm fears of a prolonged supply shock. In addition, discussions are now taking place around the possibility of a multinational coalition escorting ships through the strait, which would further secure the shipping routes. And as these developments unfolded, oil prices cooled back towards the $95 threshold, helping reduce inflation fears and allowing U.S. Treasury yields to retreat as well, both of which are supportive conditions for risk-on sentiment. Equity markets reacted quickly to the improvement in sentiment. U.S. stocks rebounded from near four-month lows, with the S&P 500 and NASDAQ gaining roughly around 1%, as investors reassess the probability of a lasting energy shock. Sector sensitive, sector sensitive to interest rates also benefited from the decline in treasury yields, with technology and banking stocks leading the advance. Semiconductor companies performed particularly well amid renewed optimism around artificial intelligence, with Nvidia climbing more than 2% and Micron jumping over 5% ahead of its upcoming earnings reports. Meanwhile, Meta gained close to 3% following reports of efficiency improvements driven by AI adoption. Remember that the Nasdaq, for those of us who trade MNQ, is a basket of different companies, particularly tech companies like Walmart. You got Nvidia, you got Meta in there, you got Apple in there, and so when these individual stocks perform well, it tends to reflect itself in MNQ or NQ's price. Okay, so we saw that today as well. Beyond geopolitical and energy market, sentiment was also supported by constructive dialogue between the United States and China. We'd been watching this for some time. Remember, we talked about in previous weeks, we needed to see positive negotiations and rhetoric on the tariff front, and we got that over the weekend. Officials from both countries recently held discussions in Paris aimed at stabilizing, that's a good vocabulary word, stabilizing their trade relationship ahead of potential meetings between President Donald Trump and President Xi Jinping, which I believe for now are postponed, if I'm not mistaken. I saw a brief update on that this rising. I'll get back to that on this evening's report as we roll over into Asia session. While no final agreement has been reached, which is important to highlight, the tone of the talks was described as constructive, and I highlighted that in bold. As we remember in previous breakdowns, that is a positive vocabulary rhetoric word, especially in regards to trade negotiations. And also, proposals reportedly included increased Chinese purchases of U.S. goods, along with broader economic cooperation. When trade tensions ease, markets often respond positively because improved economic relations between the world's two largest economies tend to support global growth expectations. Taken together, these developments helped shift market sentiment and psychology away from the panic-driven environment that dominated last week. The realization that oil exports remain intact, shipping routes through the Strait of Hormuz are still functioning, diplomatic channels remaining open, and trade discussions improving all contributed to the noticeable improvement in risk sentiment today. While the geopolitical situation remains fluid and risks have certainly not disappeared, which I want to make sure that we highlight, the market has moved away from the immediate fear of a major global energy shock for now. As we continue throughout the week, investors appear more comfortable rotating back into risk assets such as equities and cryptocurrencies, as the macro landscape stabilizes compared to the uncertainty that initially triggered the sell-off in previous weeks. All right, so we are starting to see a slight shift in sentiment, but now the question is, can we see data that we're going to get the remainder of this week and the remainder of March, along with the current sentiment, continue to drive risk on appetite? All right. So with that being said, I want to highlight first that we are not out of the water yet. This most recent recovery that we've seen in crypto and in equities recently does not signal that there is the freaking bottom is in. We still have a whole bunch of risks to be mindful of. So I want to make sure that we cover and touch on those risks to be mindful of in the coming days ahead. So first, taking a look at the total cryptocurrency market cap, something I want to highlight. There is so much misinformation and so much inaccuracy on the internet. I love this tool that TradingView allows us to utilize, which gives us the ability to place tweets on the charts. And so I want to show you guys two examples of recent comments that I've made just to show you guys the level of accuracy that we trade with in this community by using logic and sound technical analysis. So first, I want to take your attention to this post here, where I said it's a chart that everyone in crypto should be paying attention to. There's a macro relationship that continues to show up across every major crypto cycle. Every time the total crypto market cap bottoms and begins a new bull run, something else tends to happen at the same exact time. The VIX, or the volatility index, peaks and begins trending down. Why does this matter? The VIX measures fear, uncertainty, and doubt in traditional markets. When the VIX spikes, it means risk sentiment is stressed. But historically, once the VIX tops and starts declining, it signals that fear is leaving the system and risk appetite is returning. That is when capital begins to rotate back into risk assets like tech stocks and crypto. This is why the VIX is one of the most underrated charts crypto investors should be tracking. Sometimes the biggest edge does not come from staring at altcoin charts. It comes from understanding macro sentiment and liquidity flows. Every major crypto expansion phase began shortly after the VIX topped and started to decline. And you can see the date that I put this out on March 9th, 2026. And so if you take this post and you come over to the VIX and you post it on the VIX chart, you can see that I posted this out as soon as I started to notice the VIX was declining a couple of days before. If we go over and we look at the total cryptocurrency market cap, you can see that I posted this out at almost the local bottom in this new bullish leg that we are currently operating in. All right. And so this just goes to show I like this tool because it goes to show that you guys have a mentor that actually understands how to read markets properly and understands risk on, risk off sentiment and capital inflows and outflows. So with that in mind, and now that we've started to see a slight recovery continuation in the total cryptocurrency market cap, in previous sessions and overviews, we had discussed and talked about the $2.05 trillion threshold holding as a support. And the next area of interest above $2.3 trillion, which is what we recently broke above in this bullish leg, turned into support, saw a triple moving average crossover above 2.3 trillion and have now continued to make our way higher. That the next area of interest we need to see buyers overcome before we get super excited about a full-blown recovery is $2.6 trillion. And we are currently making our way closer and closer towards that threshold. With that in mind, just taking a look at some levels. This week, if we can continue to see rhetoric that supports de-escalation across global geopolitical hotspots, we can continue to see oil prices come back down. We can continue to see positive trade negotiations. We can see hopefully some hawkish rhetoric, or excuse me, some less hawkish rhetoric, more dovish leaning rhetoric from Jerome Powell this week. And we can see data that supports rate cuts, or at least does not push back on rate cuts. All things that support a risk on environment. Then the likely scenario this week is that we're going to remain operational in this bullish leg. We could possibly see some profit taking where market makers push price back down into a discount, buyers defend, and then push price higher, creating a higher high, higher low, higher high formation. Or we could continue to just see a bullish push from where we are currently trading at, with the next area of interest before we get too excited coming in at $2.6 trillion. If we can see an aggressive risk on environment and we can break above that, turn $2.6 trillion into a sustainable support, that would open the door for a deeper retracement and a fuller recovery into 2.89 trillion as our next area of interest. Okay. That would be the bullish catalyst for the total cryptocurrency market cap this week. Some things that I'm paying very close attention to, especially if we were to surpass $2.6 trillion. Get ready for a nice relief rally if that does come into fruition, because all the stops that exist above this area are likely going to get squeezed, and we're probably going to see a nice push at least halfway to 2.89 trillion, if not all the way to 2.89 trillion. Right? Not predicting that, but analyzing if the market does continue with the risk on backdrop, that is a likely scenario to unfold. Inverse to that, if we see a risk off environment and we cannot see a sustainable break and hold above $2.6 trillion, we're likely to see buyers get trapped at highs. We're likely going to see passive sellers defend this area. And then if we start to see lower lows and lower highs created underneath $2.6 trillion, that could be a cause for concern to possibly come back and revisit the base at around $2.3 to $2.28 trillion of this most recent bullish move, where we will reassess global conditions. If we do not see a push up into $2.6 trillion and this pattern starts to play out where we're currently trading at, that would also be a case for concern, and another case for a possible revisitation of this recent base at $2.2 to $2.3 trillion before we reassess global conditions. And if at any point in time $2.3 trillion breaks and we see market sentiment shift and sour, continue to worsen, that opens the door for a full-blown pullback back down to 2.05 trillion before we reassess conditions. Something I am monitoring is that Bank of Japan yen carry trade unwind. Okay. Keep in mind that if that does happen, or if we did see the Japanese finance ministers intervene with the currency, creating some type of unwind or global systemic liquidity crisis, that could be a catalyst that creates a shock to the downside. And that could open the door for deeper retracements back down into $1.84 to $1.71 trillion thresholds. So just keep those on your radar as well. For now, I think that that's out of the picture. So these most immediate levels are what I'm paying attention to in the total cryptocurrency market cap. Before we roll over into paying attention to what's coming up this week ahead, let's take a real brief look at XRP. So same thing, utilizing this little tiny nice tool. You guys can see that I called the local bottom at XRP's price. This is not to flex. This is not to say that I told anybody so. This is just to show that we operate with a level of accuracy here in this community that is unmatched. We do this time and time and time again. And I really truly hope that you guys appreciate the level-headed accuracy and technical analysis that we give you guys in this community. So this post here that I have highlighted on the charts, you can see was at the exact local bottom at $1.34. If we come over here to the media post here, this is from March 8th, 2026. You can see the institutional order flow when price was trading at $1.34.17. And you can see levels that I was paying attention to. I said the bullish scenario for XRP would be for bulls to regain control. We would need to see $1.31 to $1.34 hold as support. If that happens, then we could start to see acceptance and price move up into $1.49, where we would need to see buyers surpass. And if we did see buyers surpass $1.49, which is where this sell wall sits, then that would open the door for a possible recovery into $1.62 to $1.98, which is currently where we're possibly heading towards. So let's just take a real quick look at the order flow tools real fast and briefly go over the recent activity in terms of XRP's price.
Yes.
Okay, sweet. All right, so very simplistically, you guys can see that when I mentioned where we were trading at back at $1.34, the reason why I was saying that that was the level that we needed to see hold as support is because you can see there were trapped sellers here at these levels before. There were buy walls thrown up at $1.34. And so when we had this price move at the very beginning and first week of March down into this level, these sellers here, in my personal opinion, lacked the conviction and lacked the aggressive momentum to break that previous buy wall. You can see that there was a trapped seller right at the bottom of this bullish candlestick at roughly around $1.34. And from that area of interest, buyers have since regained control, pushing price all the way up into where we currently stand at $1.49, where you can clearly see we're starting to see the passive sellers that exist and the aggressive sellers that previously existed in these highs defending at the sell wall at $1.49. If we do see a sustainable break and hold above $1.49, we can clearly see that the next institutional sell wall does not really come in until roughly around $1.68. There's likely to be some friction around this previous aggressive seller here, where this sell wall does exist, where we can clearly see a seller passively defended this sell wall, pushed price action back down, and that resides at roughly around $1.62. So the next institutional targets to the upside, if we can hold above $1.49 on XRP, come in at $1.62 to $1.68 before we get excited about any higher prices. We need to see buyers overcome those two levels. If in a bull case, we do see $1.68 broken, turned into support, buyers trapping sellers at this level, passive sellers failing to defend this previous area of interest and pushing price back to the downside, and instead buyers prevail, become aggressive enough to push price higher, that could open the door for $1.77 to $1.98 next. As you can see, there are two institutional sell walls that sit at $1.77 and $1.98 next on our radar. We'll take it level by level. So those are the levels that I'm being mindful of for now. So again, to reiterate, a sustainable break and hold above $1.49 opens the door for 162 to 168. Anything above 168 opens the door for 177 to 198 as our next institutional profit-taking areas of interest and areas to monitor how buyers and sellers transact volume at these levels. Now, as I mentioned, the downside cannot be ignored. So if at any point in time we do not see a sustainable break and hold above $1.49, we see buyers starting to get trapped, sellers absorbing all of this buy volume, and following through with sell volume that engulfs this most recent bullish candlestick with yellow sell volume in the bearish candlestick, then that could be a case for concern. The next area of support doesn't come in until roughly around $1.42. If we break $1.42 and we see sellers engulf these two previous bullish candlesticks, that is likely going to open the door for a deeper retracement back down into $1.34 before we see buyers defend. So a failure to break above $1.49, collectively speaking, opens the door for a pullback back down into the support at $1.34 before we reassess the conditions. If $1.34 ever gives way and breaks, and we see sellers aggressively push through that area, that'll open the door for a revisitation of $1.27. Right now, the lowest level buy wall that we see on the daily time frame on XRP comes in at $1.11. That would be the last area of support, with a third area of interest to the downside if sellers regain control that we would need to monitor to see how buyers transact volume at this level with sellers. Do buyers trap sellers, defend, become aggressive, and push price back to the upside? Or do sellers prevail, overpower buyers, break beneath $1.11, turn it into a resistance, trapping buyers at $1.11, and become aggressive and push price lower? That is a far stretch away from where we're currently trading at now. So taking this level by level, $1.49, if that does not break, opens the door for 143 to 140. And if those two levels do not hold as support, and we see sellers engulf these two previous bullish candlesticks, that'll open the door for $1.34. We'll stop right there, right? So now you guys have upper boundary targets to be mindful of. You guys have some lower level targets to be mindful of. Again, these are not our personal opinions. We're not drawing Fibonacci's on our charts. We're not making magical bullish price predictions. This is institutional volume that you guys can physically see in the market that sits at these levels that we need to see overcome by either buyers or sellers before we get too aggressively happy on higher prices on XRP. And if we can start to overcome these levels, then I'll get super excited on maybe some higher sell walls on XRP. Right now, the highest level sell wall that we have on XRP comes in at $3.16. I always find it so crazy that retail traders have no idea that at any point in time, if buy volume comes up into these areas of interest, we could see passive sellers defend at any of these areas of interest and push price action back to the downside. So in this community, one day when we see price break above $3.16, we're going to get extremely excited for some possible price discovery on XRP, as that could result in an extreme sell squeeze, pushing price higher. But we're way far away from that now, as you guys can see how much sell volume still exists above XRP's price that we need to see engulfed before any of that comes into fruition. All right. Back to the remaining outlook for the week ahead. And then after that, we'll break down my M&Q trade for today. So this is yesterday's report. And at the end of the report, I briefly touch on what to be mindful of in the coming days ahead. So looking ahead, first, macroeconomic policy in the United States is going to play a very important role in shaping market direction. The Federal Reserve is widely expected to hold interest rates steady in the 3.50 to 3.75% range during the upcoming meeting. That is sitting at like a 98% probability. So I don't think that that's going to change, which means the real focus will be for us to see how Jerome Powell in his press conference comes out. Markets will be closely watching how the Fed interprets inflation risks, particularly given the recent surge in oil prices. I think that that's going to be the biggest thing that he could comment on. So I said here, if Powell signals that the Fed believes the geopolitical tensions will have only a limited to no impact on inflation, markets would likely interpret that stance as dovish. Pay very close attention to that, okay, guys and gals? Allowing investors to continue to price in the possibility of rate cuts later this year. Such a message would likely provide additional support for risk assets, including equities and cryptocurrencies. Conversely, if the Fed expresses concern or any uncertainty that rising energy prices could push inflation higher and delay monetary policy easing, that tone would likely be interpreted as hawkish. In that scenario, markets could face renewed volatility as expectations for future Fed rates would likely be pushed further out. Beyond the Fed meeting, the economic calendar this week still remains active. We have the producer price index and the PPI data. So DeFi Crusader mentioned inflation data. We're going to be paying very close attention to that. Do we see elevated inflation? Do we see inflation that comes out at previous readings and at market expectations, or do we see it come out with a slight drop and decline? As of right now, the market is expecting a slight increase. Now, we also have housing indicators, pending home sales, New York Empire State manufacturing figures, Philadelphia Fed manufacturing figures. And another thing that we need to be mindful of this week is NVIDIA's annual GTC conference. So when the NVIDIA CEO comes out and starts speaking, what does he say? How do the markets interpret that? If they do interpret it at all. But sometimes when he speaks, I've noticed that the markets do move and have an impact on some of the comments that he brings to the market. Okay. So be mindful of that as well. I'll try to give you guys updates on that just in case there's any major announcements from NVIDIA that could ripple across global technology stocks and broader risk assets. Outside of that, in the currency markets, this is very important. This is one of those shocks that we're not going to know when it happens because there isn't going to be any formal announcement. We're just going to see massive volatility come into the markets. So that is obviously, of course, the Japanese yen. Japanese finance officials recently have repeatedly warned that excessive yen weakness could trigger direct interventions in currency markets. If policymakers step in aggressively to strengthen the yen, it could potentially trigger unwinds of the yen carry trade, which is a scenario that historically places pressure on global risk assets, including cryptocurrencies. So, if we saw a scenario where the dollar were to aggressively strengthen this week because of hawkish rhetoric from Jerome Powell, and the Japanese yen versus dollar currency pair were to skyrocket, surpassing this 160 level, we know that Japanese finance ministers could possibly step in and intervene with the currency, which could create some yen carry trade unwinds as it would create some aggressive yen strength. So just be mindful of that. It's something that we still need to keep in the back of our radar as a possibility, not a guarantee, but a possibility that could create a catalyst that could shock markets globally. All right. Outside of that, we already went over the technical perspective and the total cryptocurrency market cap. I gave you guys upside targets as I highlighted in yesterday's report. I gave you guys downside targets to be mindful of. You know what to be paying attention to in terms of XRP. Real quick, taking a look at Canton's price action. In a previous update, I mentioned to you guys that as long as we can hold above the 14,801 and we can break above this passive seller that is likely defending against 15.5 cents, we can clearly see that here. We had a buyer make an attempt to push price higher. Sellers became aggressive enough here to break a previous support. Buyers tried to make an attempt to regain this level. You can see through this aggressive wick. Sellers, however, completely absorbed all of that buy volume, created a lower high here in this candlestick, and then started to trail and make their way down into a new leg lower. So I highlighted this last up candle before the down move. We need to see buyers overpower the sellers in this area, which are clearly defending currently at 15.5 cents. You can see buyers pushed up into this area, sellers defended, pushed price back down. Buyers again made an attempt to push price higher, sellers defended and pushed price down. Buyers are making another attempt at this level. If they prevail and they turn this level into support, the next area of interest we need to overcome and engulf is roughly 17 cents. If we can overcome 15.5 cents to 17 cents, that's going to open the door for a revisitation of the institutional sell dark pool at the 18,194 as our next hurdle. But for now, we need to see buyers smoothly transition through these two levels before that opens the door for these higher prices. To the downside, risks still remain. A break below 14,801 still opens the door for that 12,275 institutional dark pool. Every single time that Canton has pushed below 15 cents, I've been buying, and I'm probably going to continue to do so. All right. So you guys have an upside target, downside targets on Canton. Outside of that, any questions for crypto before we move on to my M&Q breakdown?